Ladies and gentlemen, long time no see. Welcome to episode number 13 of the Futurum Equities podcast. We got myself, the married Shay Balor, aka Stock Savvy Shy, aka Sophie's new husband, and then we got the legend Daniel Newman over here, aka Danny Dimes, aka the long-term husband. He's gonna be my soundboard whenever I have
quarter century here.
Quarter century, geez, yeah. I don't know about you, but I already got the husband card multiple times in the quick week that I've been married of like, you're my husband now. You got to do this. You have to do this type of thing. But anyway, how have you been?
Was there any part of it that, said like, do you have to wear 2 rings now since you wore the ring before you got married? Was there a second ring?
The ring on my finger is now a necklace. That's what it was.
God, I was thinking about that, because you said something publicly about like losing your phone for few days, right? This isn't like,
4 days. I didn't have my phone for 4 days.
I'm not bringing any secrets about this stuff. I don't want to like create any tension, but I don't know how that would have gone over in my house. I'm just gonna be really honest. like when you're like, I had my phone taken away. I'm like, you had what?
Your oxygen?
Wait, hold on. I saw her picture. She looks quite slender and beautiful. Like I think you gave her your phone because if it would be out of my cold, dead hands. And like, I'm a pretty big guy. You've seen those gym videos? Like my wife, like I could like, you think you're taking I can do that thing where you just poke her in the head, like when she tries to catch you and you're just touching her because she ain't getting past that. We're near my phone. We're near my trades. Thankfully, I'm mostly long term, so I'm not selling anything, but like maybe a little, but not much. And I did do well. You gave me that DigitalOcean call, by the way. I sold a bunch of, I didn't buy a common though. I just sold a mountain of puts, like when it had that big fall. And by the way, I closed out that position because why not? It was like 90%. I'm like, I'll just be done in the event that it's a sell the news week. Because we have a big week with, with the Fed. I mean, like, it is like cuts are coming. And it's like, is this a buy the news or a sell the news week? Because like, rates have already fallen, so it's kind of like, is this going to actually change the trajectory? So it's super interesting. But hey, for everyone out there, congratulate Shy. Tell him the new Mr. and Mrs. Sophie Balor. I like that. That seems more appropriate for how that relationship is going early on. Congratulations. My friend.
A lot to learn, I guess, on my end on how I should handle and her words. You
might be doing it the right way. There's millions and millions of miserable married men that like to talk about how tough they are. Maybe it's all about, they say happy wife, happy life. I mean, I will agree. In my over 2 decades of marriage, when she's happy, I'm a lot happier. So it's just how much can I influence that? That's still an unknown at times.
It's definitely a discovery mode right now. But you mentioned this week the Fed. That's a major macro events, and I think that's the market is a forward-looking mechanism, and they usually price in what's going to happen before it happens. And I think last time I checked on Polymarket, I think it was like 95% plus chance of a rate cut. I think the market's essentially pricing that in, and you're seeing a lot of companies in the last week just catch crazy bids, like just crazy, and not just shitcoins, just a lot of companies that are more on the speculative side in these secular growth themes that aren't profitable, that all of a sudden get a boost on the bottom line because their variable interest rate is now going to get less and less, and that's going to improve their bottom line. And I think it is leaning towards, if I had to put my money on it, of a sell the news event because of the velocity of these stock moves have taken place already and continuing today. But it's all about the tone on what Powell's going to do. Like when he speaks, like, is it going to be hawkish? Because the job numbers are weak. Guess who've been saying what's going to happen to jobs due to AI for who knows how long? Dana, when was the first time you published something that said like jobs you're screwed? So be prepared and learn.
You know what's funny? I was having a conversation with my CTO today because we're building like a technology platform that's, and obviously Futurum Equities is going to do this for our sell side research, which we should talk a little bit more about. But like, that will basically autonomously create a lot of the reports that used to have teams and teams of analysts. And, so you're seeing a lot of big tech is pulling back mightily on spend. And like the more criticism I get, especially on LinkedIn, Worst platform in the world. Seriously, the absolute worst platform. I sorry. I like Microsoft a lot. I hate that platform though. But like the more people argue with me that it's not AI, the righter I'm feeling I am. Because it's like the harder, it's like people with bad theses on stocks, the more they dig into a bad thesis, or the more like a short, like a bubble bear, right? The more they dig into this, the more money they don't make. It's like the more people kind of like dig into the fact that AI is not going to take their job, the more likely I believe AI is probably going to be the one that takes their specific job, because they're so like tunnel, like can't do what I do. It's like maybe not today. But it's like, are you seeing how exponential this technology is, how fast it's moving? So a company like Microsoft, like Satya making cuts though, Shy, like he's not cutting based on that it can do everything today. He's just looking at what it will be able to do. And he's like, yeah, I could probably do without like 40,000 of you, because in the next year or 2 years, it will be able to do. And so it's not all today, right? Like I'm not saying AI is taking all the jobs. What AI has done is it's empowered CEOs and boards to basically look at OpEx and human capital costs and go, do I want to hire the guy that's going to take 4 weeks off for his honeymoon, or do I want to hire an agent that's going to work all the time? And of course, you're going to hire the agent unless it's you, Sean. You're the only guy that can do a 4-week honeymoon and a 6-week engagement and a 7-week marriage wedding break, and I would still hire. Everyone else, I'm hiring an agent. But it's real. It is real. Like all my jokes aside, it's super real.
I mean, of course, because levers. It's probably one of the easiest levers to pull. And we've been saying AI is intelligence, and that's why it's going to touch every part of this world. It's a character change. And with a new character change on something as vast as AI, that's going to structurally change every industry in the world, there's going to be disruption for the workforce. I think the one area where you and I disagree, and maybe you don't, maybe I misinterpreted, is the first wave is going to be pretty vicious on job loss. The second wave is going to create new AI jobs that's tailored for AI. So I think 10 to 15 years, I wouldn't be surprised if the amount of jobs today at Microsoft will be the same amount of jobs in 10 years. I think it's going to be just a weird wave of that, but maybe it won't exponentially grow, but it won't be that much of an impact.
Yeah. So to be clear, it's not that I don't think AI will create more jobs. It's that it's less evident to me, and the time of the disruption pace is so vicious compared to past disruptive phases. So like the social era, the internet era, the mobile era, these things happened over like years and years and years. Like it took time. Mm-hmm. So it gave companies the ability to sort of start to see the transition more. And it gave them the ability to start to kind of plan for the transition. So you look back to like the different disruptive waves. I've written like 7 books about this. So like you look back into the era of like steam, and then you look at like the era of radio, and then television, and then internet, and then social, and like all of them created more jobs. It's absolutely true. The manufacturing line, all of them did. I've just never seen the converging forces of something that moves as fast as AI and something that can directly do so many of the things that we do, both physical, meaning like the blue collar, like robots and humanoids. Like, yeah, like a assembly line could never handle the nuance of like certain precision manufacturing down the line, the final assembly, stuff like that. But can a humanoid robot? You could never had something that could actually serve you fries and bring out your burger. I've never seen something that, for instance, like look at robotaxi. Like, the gig economy was a major wave of job creation. It created a ton of jobs. It created a ton of entrepreneurial types that could basically set their own hours and do their own thing, and they could deliver DoorDash, they could drive an Uber, they could make a living. But like we're literally building the technology to displace all that. We're like, I don't want those drivers. They're not as good a driver because the robotaxis drive better. They're more reliable. You don't have to worry about them committing crimes and robbing people or being robbed. And like, it's like, what are they going to do? Beat up a robot? It's like, whatever. Like everything about it. It's a safety profile, the technology profile, the success profile. All of them get better. I mean, even like medicals. I'll just say this: like increasingly, people. I'm sure you've heard this. They're like, I had something wrong with me. My doctors couldn't figure it out. I plugged it into AI and I got an answer. It's like, holy crap! Like these people like studied for like decades to do this, and this AI was faster and more accurate. And by the way, probably more personable because it's not dealing with all the administrative crap that your doctor is, that you get 7 seconds where they come into your office and then, you end up talking to a nurse. So
I mean,
I've just never seen anything like it.
I mean, you hear the phrase all the time when someone is usually perfect, they make an error. I'm only human. What does AI solve that you don't make it? Doesn't matter how perfect you are, you're human. You're gonna make a mistake. That's why going back in your autonomy, a robo taxi, like my wife, like we go Waymo because she feels more comfortable being in a car with nobody in it than a stranger who leans male on safety. Like I just think that she just feels more comfortable. And I think there's a lot of elements in the world where they're going to be a robot doing this. I don't know. It's gonna be crazy. Terminator. I don't trust it. Eventually it's going to normalize. And you're going to see a lot of marketing campaigns emphasize that. You're going to see Tesla go kind of crazy, probably on the marketing front of humanoids hanging out at the Oscars or the Emmys last night. There's going to be humanoids just hanging out as seat fillers when the celebrities want to go back to eat or drink or whatever. And there's seats that need to be filled. Like there's going to be normalization. I think it's going to be healthy, but let's talk about AI and how quickly it's disrupting industries with something that we're launching and we launched. And it's a sell side research shop. Tell us a little more about that, Daniel.
I mean, this is your party, but like you and I, when we stood up Futurum Equities, we realized that there was a large, community that would really value deeper signal, right? The insights that we have, coupled with the sort of communications to retail and the transparency that you, Stock-Savvy Shay, brought to the market through Futurum Equities, and the demand has been incredible, right? Tens of thousands of subscribers every day. We built the Futurum Equities platform. And by the way, everyone out there, if you want to join, we've launched the show. You've got this. We've got investing with the boys. We're building out more and more content. But we also realized that with all the insights we have, we could build another sell side offering that could be really powerful. And so Futurum has already built an AI-powered evaluative product called the Futurum Signal. It's what we use to evaluate different technologies. We launched our data intelligence, our sales service and marketing clouds came out last week. We've got our AI platforms coming out soon, a number of others. Well, guess what? This is an AI-powered, forward-looking evaluative model. Well, guess what else is an evaluative, forward-looking model? It's sell side. And so, we've gone through the process. We built a separate company. We built all the right firewalling. You're going to lead the team, and we're going to start to create. You can talk about the companies, but basically those really, really high value 2-page type reports that give a model, that give a narrative, that give a recommendation, and give a price target. And we're going to do that for the companies that we cover through Futurum Equities. And you're going to be the leader of that. So I'm very, very excited about that. And I think we're going to launch it. It's going to be launched under Futurum Equities sell side research during Q4 2025.
Yeah, I mean, also it's not easy to be able to just spin a sell side shop, guys. Like it's not type of thing. We woke up, I declare sell side research shop. Like it's like
although Twitter would make it feel that way, right? Because everybody's got a price and a target. The difference is we're going to put some fundamentals behind it. We're going to do the right research, the right prompting, the right data, the right discount cash flows, and of course, through Futurum, we have all the models. We have the models for consumption of all kinds of different technologies and products, which we can use to add some value, right?
Yeah, and you also need the blue chip hedge funds to listen to your reports, and that's something that that's something that Twitter, the Joan Jane in their basement, that doesn't really happen all the time. So this one will. I will say it's going to happen. The companies that we cover are going to happen in waves, but we're specifically targeting what we believe are the emerging trends and undervalued assets in the fourth industrial revolution. So as you guys know from a couple months of us being on this podcast, when we launched Futurum Equities, like we are not backwards looking. We think that that's detrimental on outperforming the market. Like waiting to see the proof in the pudding and the fundamentals and the balance sheet, Excel sheets, you're too late. You're seeing it already with a lot of these names that are just catching major bids, 3, 4, 5xers, and then they have proof of concept in their earnings. They're like, all right, well, 5x already. Right? Where was the vision when people were claiming it as a shitco or this is a pretender? Or this is not having revenue or earnings to back it up. Like, I'm not going to participate. We have stuck our neck out every single time on that. Guess who? Oracle. Oracle was top 5 on our Futurum AI 15, like right from the get-go. Look at that. That RPO was a video game number, like video game number. And people are still like in disbelief. Like the first thing I did after I got my phone back from my wife was look into that Oracle earnings report of like, what went to that RPO? I mean, you want to speak on that, Oracle? Like, what are your takeaway?
I mean, let's just take a minute and just, like, I don't know if we should like have music play and some bells drop, but like just some of the calls. What have been like the pound the table things that our team has had since inception? But by the way, also some of them that really predated even us setting up Futurum Equities. I mean, you go down our 15, Astera Labs. I mean, you pounded the table on that one from the moment you came in. I mean, what an absolute monster name that has been. I don't think there was a more bullish name in the FinTwit or across the Wall Street sort of pundit group that I think we're part of. They called Broadcom Avago. Like, I have absolutely been beating that table for some time. Oracle is another one. I mean, I was calling Oracle at $70 in the middle of 2022 when everything was going bust. I was saying this company's got so much data, it's going to be so critical to enterprises. Like, this is going to be a buy. It's going to be a buy for a long time. You kind of go down the list. Google. I mean, Google wasn't on our A15 because we didn't do but like Google is now at 3 trillion market cap. Like, remember this was sub 2 not that long ago. And what did we say? I was saying, don't worry about regulatory. It's noise. This is probably the best AI play, not named NVIDIA, in terms of having data, having models, having infra. And if you look at the Broadcom play, Google's a massive part of why Broadcom's so successful right now. So, we have been, hopefully people out there have been listening to us as we've been sort of banging on the table about things that would perform, Shy. So, and this is just like a little sample of what having a real understanding of the technology and then having a real understanding of narrative and being a bit more future where you don't obsess just over some of the traditional ways things are evaluated, and you're able to see through it. It's like there's reasons to be bearish always, but most of these people who are perpetually bearish miss so many opportunities to make money. They sound smart, they create great self-doubt for those of us that take chances, but most of the time people like you that are taking risks on names, you end up being the ones that outperform. And you shared your 3-year portfolio. I mean, you're crushing the S&P. You're crushing Cathie Wood, which I think anybody could. And you're really, in a lot of ways, you're one of the best right now, in terms of you are beating the market consistently. And by the way, you're finding deep value in names that people wouldn't take chances on, and you're seeing it. And that's why I mentioned like DigitalOcean. You're like, you told me a move was going to happen, and it's literally happening exactly as you said it might.
Well, first off, I appreciate that. Those are better than my wife's vows a week ago. So, no, I mean, I think for Google, like, it was one of those opportunities that now people are saying, because across 250, like, how did I miss it? It was stuck for years. And it was so easy, like you mentioned, on participating in that bear FUD, where, of course, search is going to have now a competing product with AI. But the TAM from AI, especially on the infrastructure side, is far greater than information retrieval that Google had in search and monopoly they had in search. Far greater. And I think you're now starting to see signs of that re-rating of, this is not a search company. This is actually a Google AI. It's an AI infrastructure company. And their TPUs are now, I think, getting re-rated specifically because they're at the 7th generation and they're years and years ahead of all competing custom silicon chips. And I did want to ask you this, like, is there a moment where you think they're going to start selling TPUs externally and bring that in? Because the quality's up there now.
Yeah.
And it's like,
well, While you were out, that rumor started spreading that
Mm,
Google was shopping TPU to some of the smaller neoclouds as a
I didn't even.
potential. Yeah.
Interesting.
So, well, it's probably the 4 days you didn't have your phone.
Well, that makes sense, though. I mean,
But
listen,
but
it
but I mean,
works.
look what Google has done. Because like I said this, like Jensen is right when he said that most or many custom AI chips or ASICs will get canceled. But what he didn't say is that the most important ones won't get canceled. So Google will not cancel, Amazon will not cancel, Microsoft will do a chip. Meta's MTIA chip will happen. We will see OpenAI do a chip. Likely Oracle will do at least something as an
And
inference chip. It might be
and
the
ARM
OpenAI
too.
chip. Well, ARM's going to be the design partner, maybe
Yeah.
with Avago, maybe separately on some of these for sure. But my point is like, but yes, a lot of custom projects do get canceled. But these companies have the money, the time. They will not go away from NVIDIA in the sense of like NVIDIA will be the workload. And I mean, Hocktan actually said this. The workloads that are going to be done for Google itself will be on Google. Will they sell to external? I think they will look into that. But again, this is like 7+ generations into their custom development. Most of these companies will primarily build and develop it for their own use cases. Like Meta has so many internal use cases it will build for, and it will build to scale. But I don't think in any case does it mean NVIDIA can't win. I mean, our new forecast has GPUs almost 4 times the size of XPUs in 2029. So it's not like GPUs are going to just dissipate, but the 10 or so billion of custom AI chips will become 120 billion or so by 2029. And it will grow faster than GPUs, Shy. So we are seeing an inflection. And I think, by the way, we didn't really talk about this after NVIDIA earnings because you were out, but like a lot of the kind of NVIDIA, why it may take longer to get to 5 trillion than it did to get to 4 is just the deceleration. Because even though it's going to keep growing by many, many billions and creating massive amounts of cash flow, we all know the market's forward looking. The market wants to see accelerated growth. Avago got re-rated after earnings because people are seeing the OpenAI deal. They're seeing the accelerated growth. It got a higher forward multiple because for the next few years, it's going to see faster growth. GPUs are going to see slower growth. It's going to slow down. It's slower as a rate, not slower as a volume. So this is a lot like cloud, Shy. Like when AWS was growing by like 8 billion a quarter, but like only 25% growth because it had like $150 billion run rate. Like people started discounting it even though the overall amount of growth was higher.
Well, do you think it's because where we're at this part of the AI trade is we're moving away from the infrastructure build out winners to more of the utilization winners? Like who's actually turning, who are the toll booths turning AI into real revenue? And I think that's why you're seeing a lot of these like new utilities merge. Like, for example, the Nebius deal. Nebius just signed a deal with Microsoft that was bigger than their own market cap initially. And you're seeing names like Iron performing really well. A lot of these AI infra names, these neo clouds. CoreWeave just signed a $6 billion deal this morning. I think we're turning that new phase where, for me, I knew we're going to go from stage 1 to stage 2, and stage 2 is going to be applications. I think I didn't realize there's going to be a stage 1.5. And that stage 1.5 is the toll booth winners, the utilization winners. And I was wondering if I'm on the right track, or do you think that we're not in a utilization economy as of yet? We should not forget about the infrastructure build out winners yet.
No, there's a ton of build out to go. I just mean that kind of the overall growth rate of this will start to experience the law of large numbers. We won't see, if you think about like if we kept growing at 200, 100+%, I mean, we'd be in the trillions like by like 27. I mean, there's just like literally we can't create capital that fast. We can't build that fast. So I overall feel super optimistic about the growth. I'm as bullish as I've ever been about AI. I think it's going to revolutionize industries. I think NVIDIA is still going to be the biggest player in the space. I do think we're opening up to more players. I think we've been introduced to kind of this energy AI play. We're seeing all the recasting of companies that were maybe mining companies for crypto. that are seeing that they can become capacity companies for AI, better business model potentially for them. It is going to create noise. Like you're going to have to figure out, like, I tweeted something about IREN, and like it blew up. Everybody's telling me buy this one, then all people will be like, no, Cipher, no, HUT, no, like there's all these different plays. And then of course some people are like nothing's better than Nebius, other people are like nothing's better than CoreWeave. But the bottom line is like, it goes back to when you and I met when I was at Milken. The room told me one thing, Shy. There is more capital chasing data centers than there is data centers to chase. So the build out is very real, and this phase is not over yet. In fact, I still say AI is extremely early.
I agree, and I think that this past earnings cycle was that light bulb moment for the market, though. I think that they finally saw it in like the Meta's earnings, the Azure numbers, big acceleration at that scale. You saw it with Google Cloud, just like what's happening as for this little player that now might become one of the top, like deserves to see with the big boys as cloud service providers. And then you're also seeing it with the Oracle numbers. I mean, I think that we are just so freaking early. And I think that people are just referencing 1999, 2000 .com bubble when I think we're years away from that, because we're not even at the point where you're seeing the S curve start bending. Like we're still up there. Eventually there's going to be a digestion period. We can't go at the scale at the pace we're going at. I think it's going to be in 2 years, probably, if I had to put money on it. And then we digest for a couple, and then you see that next leg of growth after that for whatever the new hot pocket is. Maybe it's quantum, maybe it's AGI, who knows what. But as of right now, that AI is the main ticket. It's the main event. And I think that provides a very high floor in the market. And that's why we're not seeing any seasonality weakness right now in the market. August, September, like we're supposed to have a pullback. I 2 days maybe was the biggest pullback, and it was a couple percentages. Why is that? Rate cuts are coming down. People don't want to have cash on the sidelines because they know rates are going to get lower and lower. They want to participate in this AI trade because this is a generational opportunity. We've been saying it for a long time. Now it's being proof in the concept of it via earnings. And I just think that you're seeing like names like Elon participate in $1 billion stock purchase on Tesla. I think that maybe is a great sentiment read of physical AI might be starting to happen. That really hasn't participated in the AI trade. And when that does occur, that's going to be another tailwind for this whole theme. So it's crazy times to be part of. I don't know.
Yeah, it's there's a lot to be optimistic about. On the rate cut thing, I still think the September thing, like, patterns, everybody loves patterns. The earnings outperformed. The bubble is different because the earnings growth of the companies that are in the quote unquote bubble has been a lot higher, but CapEx has risen quickly, and that ability to sustain that, the money doesn't come out of thin air. So the money's coming out of these future deals. There's a lot of this kind of round tripping going on right now. Industry deals within the industry deals, passing dollars around in these circles. It's going to be interesting to watch kind of how that all plays out. But like, it just isn't a typical cycle. I sent something over this weekend that got a lot of looks, Shy, but I shared something about, the bottom line is that the traditional semi boom bust cycle has been broken by AI, especially like with memory. Remember, memory was such a boom bust cycle. But right now, when you have HBM and you have twice a year major upgrades from NVIDIA and AMD, and now you have the XPUs from Broadcom, and there's not enough HBM. And so, as long as that, and then by the way, you're starting to see the prices increase because they can, because they have, so TSMC, Broadcom, ASML, these companies are all going to be rock solid. There's going to be a ton of demand for them. And then, of course, companies like Micron that had been historically hard to own because there's too much boom bust risk that should be re-rated because they have a major play in AI now.
And I think, again, like Micron's thing was memory's a commodity, fine. But when the commodity is in a market like AI, that's like people thought it was maybe a lake, potentially a river. It's a freaking ocean in the market size and keeps expanding. You're going to benefit. High tide raises all boats. And I think that be specific, though, on where you invest your position on the AI trade, because there is going to be that AI tsunami, like Dana and I talk about. Nobody wants to live on SaaS Avenue anymore. We've said that multiple times in this podcast. Software is a very delicate, polarizing space on how to participate in. You're seeing the winners of it, the first wave of winners in that space. You're seeing ServiceNow become one of the first winners. You're seeing clearly Palantir. You're seeing Snowflake. You're seeing MongoDB. But there's a lot of software names out there that are looking like layers, not platforms. And I think going forward, you need to have some kind of a agentic AI platform angle to survive that AI tsunami. That's your lifeboat angle. And names like GitLab are getting punished. Names like in that CRM space, like Monday, Salesforce. I don't know what that earnings report was about. It's like, even though Salesforce has like a massive advantage due to the data they have and their enterprise presence, but that whole CRM space is going to change, and that it's noisy now. And I think you're seeing every name in that space kind of realize we have to change the narrative and adjust. But what do you have to say about that whole?
There's big work to do. I do, in all of it, we're not really, we don't really hit on Apple too much, but like, what the heck, right? And I think SaaS and kind of what Apple's going through is there's a similarity in the sense that this stuff is, if you've run a business, an enterprise, you worked in large corporations, you know how deeply entrenched software can be. Mm-hmm. And so the moat for now with a lot of these companies is that their software is so deeply entrenched in the business that they have some time, because most of these are multi-year agreements and contracts, and unearthing this stuff from inside these companies is going to be hard. Service clouds, sales clouds. But that doesn't mean they're loved. And that's probably one of the more interesting things is like, is the technology actually loved by their users? And like, if it's not, if they're like, I'd like to have a more ChatGPT-like experience, I'd like a Gemini-like experience, they're opening themselves up, because like people would prefer this kind of unified horizontal platform that can look across all data in a governed and compliant way. Mm-hmm. And so I keep saying like Salesforce, for instance, has runway because they're so deeply entrenched, but they have to get it right. Like if they stick too much to their historic way of doing business, they will run into a wall and people will abandon shit when that opportunity comes, especially when AI, can do more code. It can rip and replace. It can be utilized more easily across platforms. So it will open up that door. It's a little bit like Adobe, like Adobe is another company. It's done is grow. It's just grown. It's expanded. Its earnings are up. Its forecast is up, and people just don't believe, for whatever reason, they just don't believe it's going to be okay in the long run. That's the stock is telling you that, because as all of the fundamentals have risen, the price has actually dropped. So it's either Shy, it's like they need to tell the story better. Like if they have a story for the platform era, they need to tell a platform story. If they don't have a story, then these are the companies that I say probably aren't going away tomorrow, but in 3 to 5 years, they're going to have a problem. So getting that story right, communicating how they're going to evolve to being platform, AI agentic platform companies, it can't wait. Even if their numbers are still going up, because the market is telling you by the way these stocks have been re-rated that they do not trust that these companies can make the pivot. They're seeing what, generative AI is doing. Therefore, they know that there is a future that may or may not include these companies. So that's the work that these companies have in front of them.
And it's a mountain for them because, again, I mean, Salesforce is tricky for me because they're so entrenched, like you said, but they're very much a land and expand business model where they acquired tools to put into their platform. So like, I didn't love the recent acquisition of Informatica. So like, I think we'll see where that turns. But anyway, that's enough of the CRM space.
Yeah. The one little thing I'll just say before we close out on this is enterprise AI is even earlier than AI as a whole. Mm-hmm. It is so early. Like most enterprises, you were gone. There's that MIT study that came out that said like 95% of AI projects in AI are not, enterprises are not driving ROI.
I saw that. Yeah.
A lot of that kind of data is out there because like enterprises are still struggling from what's hard. And what's hard is that people are struggling to actually adopt. It's not the tech. The tech is actually very, very prolific. It's the people are resisting change, which is historically what's happened in every revolution. But increasingly, AI doesn't need people. So companies can kind of full charge through this stuff and keep changing. Mm-hmm. But enterprise is even earlier. I actually think We're in the, this is the pre-party. Like you're still watching the afternoon games with a keg. We're not even, we haven't even opened the bar yet.
Yeah, I think, regarding that MIT article, I think it's just people are discovering use cases. They're in trial and error mode. So when they find out which use cases relate to them, they're going to use it. It's not like, oh, AI is a dud, no ROI. It's not going to be working. It's a bubble. It's not that at all. But going off of what else happened, I did want to ask about circle back on the Oracle earnings, because I was wondering if there's any kind of read-throughs for Amazon or AWS, not on the cloud computing front, but they have a database business that's like Red Hat, DynamoDB, like more DynamoDB as the database. Is this a good pre-read on what might be flowing through AWS on the database front? That's going to be a winner down the line.
I don't think there's enough there that you could make a direct correlation to what Oracle has. Oracle is the enterprise database for like 400,000 companies. But again, Oracle's future RPO had most to do with, 3 massive companies that have made huge commitments for compute. Like they are, like you could argue now that Oracle is like actually the largest neo cloud. Like they've basically built like an AI inference cloud and they're willing to build the capacity. I mean, my biggest worry about Oracle is just the margins. Like it's not particularly great looking margins for the size of that business. But I mean, the amount of equity that was gained and added that day alone, I mean, a company like Oracle, like it's one thing when Nebius gets a Microsoft deal and it pops 50%. Like you've got a company that's kind of nascent that people didn't understand. Now they see it and they're like, okay, I'm in. Oracle, in most years doesn't move 30%. It just doesn't. I mean, it doesn't happen.
Right.
So to move that, have that kind of move in a day, just showed an incredible pivot. One of the most interesting things about AWS was when they actually aligned the revenue expectations, where Oracle sat next. I shared that on X the other day. Like, arguably Oracle could be the second or third largest cloud. Based on these wins.
Can I ask you this as well? Like one question I had when I saw that OpenAI and Oracle $300 billion deal is, how is OpenAI going to have that cash to pay for that? Because they're unprofitable. They're burning cash. I don't know. I forgot what the rate they're burning it, but they are not making a profit. They, I think, have in the low teens billions in cash. Like, how are they going to afford $300 billion? Like that was like where I felt like, oh, it feels like more video game numbers when like I don't even know how they can afford 300 billion in the next couple of years to pay for it.
There's all kinds of different ways companies raise cash. I mean, of course, some of it can come from OpEx or OpInc. Some of it can come from shelves. It can come from raising debt. It could come from, when you are a company with that size, you have that order book. There's lots of different ways you can access capital. But yeah, it's not, that is one of those things. I think video game numbers is interesting. Like, I mean, how does OpenAI keep paying for its growth? I mean, it raises money. I mean, that's what companies do when they're growing fast enough. They can't just grow organically through revenue run rate growth. They have to grow through, they use vehicles. They create corporate bonds. They sell more stock. They dilute. That's the attack mechanism for getting more cash. But yeah, I mean, they'll also probably cut. This is going back to that AI jobs thing, Shay. They'll probably cut more jobs. They're going to cut more costs to pay for it. That's part of where the cash is coming from. Lower OpEx and reinvesting into CapEx.
Yeah, I agree. I did also want to talk about, I know we have some time still, but I want to go over quantum because unfortunately during my time off, I was not able to attend the analyst day on Friday at IonQ in New York City, but you were able to attend. I wanted to hear what you thought the atmosphere was like, because the stock went up 18% on Friday, and I think the market and the street loved what they heard. What was the environment like on Friday? What did you learn from it? Any kind of takeaways you want to publicly talk about?
So I'm not tired of you, Shay. I'm just apparently tired in general. Well, first off, why did the stock rip? I mean, it wasn't just Investor Day. It was a very timely press release. So they got the regulatory approval on the Oxford Ionic deal. Mm-hmm. And so that was a big deal that, was a big bet for the company. And the fact that they were able to get that through, there were some concerns, I guess. And so that was sort of that sort of freed the stock to run, because it ran really early. Like most of the run happened before the first comments were even made at Investor Day.
Mhm.
You know, there was a lot to share because obviously they're really full stack. They're focused on quantum networking and quantum compute and, quantum timing, all the different parts of quantum. IonQ is certainly the most full platter right now. I say this to be clear as an advisor to the company, so I have a personal interest in it. I thought the best analogy they gave was kind of there, and I think you shared a um, Futurum Equities note today about IonQ and the CUDA moment. Now, again, with 36 logical qubits available right now, there's not a ton you can do with a quantum computer. Okay, there are some things that are being done, but the future with thousands, right? We're talking thousands in the next 1 or 2 years of qubits. There's going to be a lot that can be done with a quantum computer. But the idea of basically taking the acquisitions the company has made and the way they told the story of their networking, kind of comparing it to the Mellanox acquisition that was made by NVIDIA, and then the ability to take the compute plus the networking and really build this distributed quantum computing infrastructure was probably the most powerful thing. The other thing that stood out to me was, of course, just the ecosystem. Again, I shared a tweet. You can look it up. It just showed all the partners, whether it's been NVIDIA, whether it's Microsoft, whether it's some of the big hospitals, states, governments. There's a lot of companies and enterprises and organizations that are in the IonQ ecosystem now. And I think that's always a validator when these bigger companies are betting and participating and getting involved, because that's the two things we need. We need more logical qubits and we need better software. And so that's going to be the attack vectors that have to be done over the next few years. And then, of course, IonQ has a really interesting play in quantum networking and security, because we've got this great run with stable coins and this great run with crypto, but we have an encryption issue. And quantum, likely by the end of this decade, will be able to break RSA encryption. That's what keeps Bitcoin safe and whatnot. So companies like IonQ are going to be called upon to help solve that problem.
Yeah, I think that's what I was fumbling to see or scrambling to see what was said on Friday that wasn't known to the public already that causes to catch the bid, because for over a year, you can see through all their acquisitions, like, this is not a hardware company, guys. They're truly pushing for a quantum network. They are adopting what like NVIDIA did for CUDA, and they're trying to become the CUDA of quantum. Like we've talked to Nicolo about it on the Stock Twitch show. Like, he mentioned that, like, it was not brand new news, but I think maybe on Friday, with the combination of the Oxford deal finalizing, now there's a sovereignty angle on demand. It's not a research lab. It's just more of a actual national security government play that can fund it. I think it became more of a reality where NVIDIA owned the ecosystem, captured monopoly economics around it, because they had the best GPUs in the game, but what kept people staying in was CUDA. And I think that Nicolo is also signaling that IonQ is on the same kind of trajectory where the qubits, others will have just as much or even greater or less qubits. Doesn't matter. Like, that's not their game. They're trying to lock in that runtime environment nature that NVIDIA is doing for CUDA, and others will going to have to be using it. That railroad mentality. So I think that combined with the Oxford deal closing, that was $1 billion. I didn't realize that was at risk, but it might be for quantum, because quantum is such a national security component. And I think that the timing was interesting, because this week we have President Trump and the UK Prime Minister speaking on some kind of tech pact. If quantum is mentioned in some vein, which it should, because if China solves quantum first before the US does or the NATO does, doesn't matter who runs AI, quantum is going to be a much bigger weight of national security component. So we can't afford to be second in quantum. Who has the biggest platter of products and roadmap for ensuring that we have that national security angle on quantum? It's IonQ. And I think that the Oxford deal closing, read between the lines for me, I think that even if IonQ is mentioned in the vein with the NVIDIAs and OpenAIs this week, that's huge. That really is huge. And that's going to maybe symbolize some demand flow coming through on the top line, but also like their cash. They have a massive cash position. I think
1.6 billion.
Yeah, that's 60 to 70 million dollars a year in interest income expense they can get. I think that's more than any other
I saw
publicly
that
traded.
stat, but you do have to remember they're going to use some of that cash.
Yeah, of course. Yeah,
cash flowing. But yes,
it's
it may cover a lot of that burn.
it will, and it's I hope they use it. And if you're an early disruptor category leader in a theme like quantum, I hope they don't just like settle for interest expense income. Like I want that R&D spend. You need to capture market share, and exactly what Nicola and team are doing. So that's why also I think they're up 6% again today after being up 18% on Friday. Like there was no profit taking. This is a re-rating on a category leader in a theme like quantum, and there is a rate cut play, and in the what if categories like quantum, space, nuclear, these themes that are super cycles are coming after AI that have a huge runway that lower interest rates will help them on cash burn. So I know we are coming up at time. Dano, is there anything? We're having another. This is a +1 because we missed last week. We're going to have our normal timing later this week on Friday. So that show will be happening still at episode 14. But anything you want to say before we sign off on episode 13 today?
Well, I did want to point out that a certain fintech that didn't get into the S&P, because Hood did get into the S&P, and as a large shareholder of Hood, still very bullish and very proud. But I think we're getting very close to price discovery for my beloved SoFi. It's up about $1.02 right now. Today it's 27.57 as we speak. I think it's actually at all-time high as its SoFi ticker is already, and I think if it hits around 28 and change, it'll be all-time high from its IPOE pre-SPAC era. I did make a call that I think this thing could hit 30 before the end of September. Some people thought I was crazy, but every day it's got a lot of relative strength. I mean, the whole market's not really up today. It's been a quiet performer. So, I've been beating that drum for a while, but yeah. So I guess real quickly, anything you've added, I added some hymns. I'll tell you another play I added. I added a lot of Oscar last month at around $13, but I bought a lot of Pfizer today. I know it sounds funny. Pfizer's trading at like $23 a share, only about $1.50 above NAV. And it's paying it just raised dividend. It's paying a 7% dividend. So, knowing that we're heading into rate cuts and possible sell the news, looked at a couple of defensive positions. I took a pretty big stake in Pfizer because I think it would do well in a downturn. A lot of those kinds of companies do. And of course, the 7% yield. And trading it barely above book value, it's a good company. So
Yeah,
it's kind of a quiet play for everyone out there. If anyone's kind of looking like, I like some of these names, I like an Oscar and a Pfizer, having a little bit of that kind of position and exposure right now when growth is so frothy and it's been great. But and I also, by the way, it's been a great run of Solana. If you're in the crypto trade, we don't do a lot, but my largest crypto position, Solana, and then Ethereum, and then Bitcoin. So it's been a great run up. It's rewarding to see your diligence convert. But I also do think, my advice, and again, not financial advice officially, but unofficial, thoughts on all of this is not a terrible time to have a few defensive positions. That's all I'm going to say is because we've had such a run and rate cuts might mean more growth, but AI is going to go for a while. But there is a very real chance that they're going to get a correction at some point. And historically, the way these have worked, where they were longer and more drawn out. But I think in the era we're in, it's elevator down, stairs up, meaning like the elevator, when we do get a drop, it'll happen fast, it'll be violent, and then we'll be back to the upturn, kind of like April.
I mean, I hope so. I've been sitting on some cash. And I have some names I want to get into on the AI trade because I think there's going to be years and years of growth ahead. But thanks for tuning in, everyone. Episode 13 is wrapped up. See you in a couple of days on episode 14.